Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be going over our live mortgage rates, and then we're going to be talking about renovation loans. Give us just a moment here to get started. We put the chat up on the screen there, so feel free to drop a comment there in the chat as you tune in. And we'll get started in just a moment. All right, appreciate the comments coming in there already. Thank you for tuning in nice and early. All right, it looks like we are live on all the different platforms, so we'll go ahead and get it started. We'll take the chat off the screen for now, but keep dropping comments there in the chat, and you can also drop any questions you have in the chat as we go through the presentation here today. So welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do on this show every weekday at 11 a.m. Eastern is go through our actual live mortgage rates for some different programs. And then we do a deep dive into a different loan topic. Today's topic is going to be renovation loans. So our sales manager, Jose, with 28 years of experience, will take us through a deep dive into renovation loans. But before we do that, we'll do what we do every morning, which is go over our live rates. So Nick, if you're ready, let's go ahead and pull up the pricing tool and let's see what the rates are looking like this morning.
All right, let me switch my screen and we'll check it out. So as Kyle mentioned, this is our pricing tool. This will show us the general rates and the APR for 27th, just after 11 a.m. So all of our standard programs are live here. If you'd like a full breakdown of all of the itemized fees that go into the loan estimate, please get with one of our team members. We have over 300 licensed loan officers. For the demo, as we do every day, we'll set up a basic scenario to programs. So we'll set a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. And find the lowest rates we can offer for conventional, and we'll compare that with FHA, which is usually the second option. And then we'll go into our expanded guidelines, also known as non-QM, over 5,000 additional options here. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, let us know. We can quote it, no problem. And US properties, we actually did the episode yesterday on that, so check that out if you want to see those options. We'll start with conforming conventional. We'll do purchase, 30-year fixed standard loan. Occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score here of 760, estimated debt to income ratio here of 40. So settings, let's check it out. Not much change from yesterday. It looks about the same, 6.375 rate for 2.5 discount points of cost, puts the final APR at 6.672. Here for conventional, hopefully it comes down as well, as they did start to trend downward a little bit yesterday afternoon. For any customer doesn't qualify for conventional, the next option we want to compare, set up the same exact scenario, FHA option. So FHA allows more leniency on credit issues, credit events, as well as a much higher debt to income ratio. But we'll compare apples to apples here by comparing programs with identical settings. So the only thing we've changed here is the loan type to FHA. So let's compare these options. A little lower than it was yesterday, I believe. So 5.5 rate, 2.375 discount points and costs. Put the final APR at 6.428 here for the best FHA. A touch cheaper than conventional for the same exact scenario. So our customers that qualify for both, definitely check out FHA. And this APR doesn't yearly insurance that's required. So our customers that need to use FHA, definitely a very good option right now, as it's actually cheaper than conventional in some cases. So great options here. Now, where we love to specialize is if our customer, unfortunately, doesn't qualify for either standard program. Most other banks or lenders would have to deny that customer. but that's where we love to present our 5,000 plus additional options here, also known as non-QM. So we'll keep everything identical, but now we get a new option where we can edit the income type. So full doc is what we use in FHA. That's 2 years of tax returns, what most people are used to. So if we do not qualify with 2 years of tax returns, we'll want to take advantage of one of these alternative asset-related programs, business bank statement programs. The investment programs are just for investment properties. We'll show those in a minute here. Personal bank statement, 12-month, is the most popular today. We also have RSU, stated income, VOE, 1099, P&L, all kinds of different options. But the most popular is our 12-month bank statement, and that's for our self-employed borrowers. Submit 2 years of tax returns, may have various write-offs, and may not qualify at all, or just may need a little more income. Either way, we can tax at all, just using their last 12 bank statements to determine a debt-to-income ratio of 40% in our example here, using just the cash on the tax returns at all. So many of our borrowers qualify for much more income. So let's check out the rates here. They're very comparable to conventional alternative income. So the best option today, 7% rate, 2.175 discount points at cost, puts the final APR at 7.385. So again, a point of conventional to use alternative income bank statements instead of tax returns. So great option here for our borrowers that need it. And if we scroll hundreds and hundreds of options here, variations, some of these may allow bankruptcies, foreclosures, other credit issues. Some may allow different ways to calculate the income. So please get with our teammates, figure out which one works best. There are hundreds of options. And before we get into Jose's renovation, I want to do some investment properties. So final 2 demos here. We'll do investment properties for our investors out there. We'll set up the same scenario, 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates for our conforming conventional options for investments, our non-QM expanded guideline options. Remember, government programs, FHA, VA, USDA do not work for investments. So we'll start with conforming conventional here. Everything the same as all our other demos. All we've changed is the occupancy. So let's check out the options this morning. Oh man, they're identical again. So close. So again, these programs are battling it out. Option shows at the top, even though it's not a true conventional option. It has been cheaper for the last few weeks, but since rates went down yesterday, it's identical. Option is not a true Fannie or Freddie option. The first true Fannie or Freddie option is going to be here, the first conventional. So we'll just look at this, 6.875 rate, 3.5 discount, put the at 7.290 for the conventional option. And hopefully as rates continue to drop today, and hopefully this should jump up to the top of the list. So a good option here. Definitely recommend our customers always compare them. So for the final demo, we'll set up everything exactly the same. And this time we'll choose expanded guideline for investment property. So for non-QM expanded guidelines, first thing we need to select is our income type. The most popular income type loan we do here is our DSCR option. That's because it doesn't require any income or employment from our borrower or documents on that. We simply use the estimated rental income appraisal to determine a DSCR value. If the estimated rents can cover the expenses, aka the property cash flows, that's a ratio of 1 or higher. Ratios under 1. For the demo, we always put 1.5 so we can see all of the programs pop up. And finally, a prepayment penalty must be selected for a non-QM. 3 years is standard. That's what we'll always use for the demo. There are options for no prepayment penalty, which will cost more and limit the programs. And there are some programs that allow 5 years, which does save our customers some money if they're holding properties long term. 3 years is the most common, so that's what we'll use here for our demo. So let's check out the options today. All right. So best option here at the top, 6.875 rate, absolutely amazing. 3.0 points in costs. Puts the final APR at 7.346. So just a hair above conventional. I'd say still 100% of investors, when they look at these side by side, would choose the DSCR option compared to conventional. So lots of flexibility is afforded with this. If we scroll down, variations, some of these higher rates and costs may allow bankruptcies, foreclosures, other issues, may allow different ways to calculate the income. You've seen some of those episodes, and may allow different. We've done some episodes on that as well. So tons of flexibility here in DSCR. Definitely recommend all our investors check it out. Now let me switch my screen again. And we will look at, try to turn Jose's screen off. There we go. We'll look at our topic for today, which is going to be our renovation loans. So these are more of the traditional primary we're going to be talking about. Jose might have a trick up his sleeve, but the conventional and government programs typically do have renovation options. Back to the primary mode, we cannot quote these live on the show because they're very specific, program specific, actual specific once you start getting into renovations, but the programs are available. So Jose is going to go through some specific examples of ways we can use these programs. And I guess let's go ahead and just talk about what's required for these first. They are pretty general. To the specifics before we show the quotes, please.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. So want to get a little bit into explaining what we're dealing with here, right? The renovation loan versus our fixed flip loan and the other loan type products that we have. Renovation loans in the terms that we're using it today are for primary, second home, and for one-unit properties, investment properties only. But the only one, obviously, that allows for investment properties is the conventional option, either the Fannie or the Freddie option. We don't have any options for for investment 2 to 4 units here in this scenario. So now wanted to differentiate this from the ones that we have that are fixed flip loans, which are for investment properties only, right? So real important that we note fixed flip loans, investment properties only, and then ground up construction. When we're talking ground up construction, that is also for investment property for flippers, as opposed to our one-time close program, which is for primary and second homes only. And those are full doc, right? Our one-time close program is a full doc option, right, versus our ground up construction program, which is an investment property, does not take into consideration the income of the borrower. So that's really important to note there. So hold on a second here. Let me clear this up. So what I wanted to know too with these renovation loan options is that they do allow for closing on these properties in the condition that they currently are, right? So that's a big scenario. That's a big thing to consider, because in these situations here, a lot of times you're looking to buy a property that may have been vandalized, maybe a foreclosed property, and there's no other way for you to close on this property except for with a renovation loan. I mean, if you're going to close with financing with a renovation loan, unless you're going to close with some type of hard money, which is again for investment properties only. Hard money loans are not for primary residences. So these loans are a great way also to increase your chances of being able to buy a property, because normally properties with these property conditions are not able to be financed. They usually have to be a cash only purchase. So this is a great opportunity for borrowers that are feeling the inventory crunch to try to expand their opportunities to try to buy a property with financing as opposed to cash, right? It's pretty difficult to buy one of these properties cash. So let me go ahead and share the options that I have with you here. I have some purchase options, and then I have a refinance option. So here is our FHA 203K purchase, renovation loan purchase. Probably the most popular of the renovation loan programs. Everyone has heard of the 203K option. This does allow you to go up to 96.5% LTV. And remember, that's 96.5% LTV of the after repaired value. So like similar to the fixed flip loans, the appraisal that's going to be completed for this renovation loan is going to be an ARV appraisal, where they're going to document the current condition and as-is value of the property. Then they're going to document the scope of the work, right? You have to provide that to the appraiser, the estimates, so they know how much is being spent and exactly what's getting done. And then they'll also come up with an after repaired value, where they will have to find comparable sales in similar condition, remodel condition as the subject, or else they're going to have to adjust the appraisal accordingly with a condition adjustment. So with that being said, we have here 7.625 as our lowest cost option at par, and you can buy that down all the way to 6%. Now, we do have rate options lower than 6%. It does have a cost higher than 2.25, so you would need some seller paid credit to the borrower closing costs, seller to pay the loan discount, and then you can go as low as you want to go, depending on how many points the seller is paying of the borrower's loan discount, because any seller paid points are not included in the points and fees test. So this is our FHA 203K purchase at 96.5% LTV. Now we do have a USDA renovation loan purchase, and this one goes up to 100% LTV. I always like to show any available lender credits on these high LTV options, as they certainly do help our high LTV loan borrowers that are usually low on the funds. So here, 7.125 has a $2,000 lender credit, which would really help with the closing costs. And you can buy that down all the way to 6% for our USDA 100% LTV renovation loan purchase. So now we have some conventional options here. We have Freddie Mac Choice Home Possible renovation option here, 95% LTV. And this one, very good option here, 7.625 is our lowest cost option, and you can buy that down all the way to 6.625 for a 95% LTV Home Possible renovation loan option. Now we have a Fannie Mae Home Style renovation loan at 95% as well. A little bit higher on the cost here than our Home Possible option. You're looking at 7.625 as our lowest cost option, and you can buy that down to 6.875% for our Fannie Mae Home Style renovation loan purchase option at 95% LTV. Now we have another 100% LTV renovation loan purchase, our VA loan. Amazing one here as well. You're looking at 7.75% as our lowest cost option and 6.125% as our lowest rate option for our 100% LTV VA renovation loan purchase option. So renovation loans do not allow cash out refinances. However, note that the the funds being used for the repairs or for the renovation, whichever it may be, if you're repairing a roof, like replacing it, or if you're just replacing kitchen cabinets, remodeling bathroom, replacing windows, all that good stuff that you can do with a renovation loan, all of those funds that you receive for the renovation are not considered cash out because you're putting them back into the home, right? You're adding value to the home. So it is not a cash out. It is considered rate and term. So with that being said, keep in mind then you have to follow the rate and term maximum limited cash out, which is usually $2,000 max, but that would still be considered a rate and term and not a cash out refi. So you would follow regular LTVs guidelines for rate and term, which basically take you to the maximum LTV for a purchase. So in this case, our rate and term refi at a 95% LTV for this Freddie Mac renovation loan, and it's going to be similar for the Fannie Mae renovation loan, the FHA 203K, the USDA and the VA. They're all going to allow the rate and term refis to complete renovation to the subject property. So here, 7.625 is our lowest cost option for this rate and term conventional refi, and you can buy that down to 6.875. So this is a pretty cool option if you got those borrowers considering, should I refi or should I not refi? What is the benefit? Well, depending what they're looking to do, right? Maybe it's a combination of pay off high interest rate credit cards and remodel your kitchen and bathrooms and make it your dream home so that you don't need to go on the mission to sell your home and hope that you find one, right? Because that's always the insecurity now when selling your home is, are you going to be able to find a home? That's what's unfortunately feeding this no inventory situation, is sellers not selling because they don't know if they're going to be able to find what they're looking for. So our last option here is an investment property renovation loan purchase at 75% LTV. Now, we do know 80% LTV is the maximum for an investment property purchase using on a non-renovation loan. In this case, when you add in the renovation component, the extra cost does not give any options, any compliant options at 80%. The only compliant options we get for this program is 75%, unless, again, you have the seller paying some closing costs of the buyer, and you can use that seller credit to pay for loan discount, and then you would be able to do the 80% option. But considering our for quoting purposes here, without making the assumption that we're getting seller credit, this is the highest LTV that we could do, 75%, 7.625 rate, cost of 2.5. But remember, this is a full doc purchase of an investment property with a renovation loan. So your investors looking to buy those foreclosed properties that are totally damaged, instead of buying cash, this is one option right here. A great option, the conventional investment renovation loan purchase.
Okay, it looks like we have a couple of questions here. So first question is this for primary homes only? I think that was the answer asked just before the last one.
Yeah, I just showed there an investment. You could do second home and primary as well, but when you're doing second home, you just got to be on the lookout for compliance pricing, basically, because there are going to be add-ons to the cost when it is a second home, which may probably not allow you to do the maximum second home LTVs.
All right, looks like we got a question from Instagram here as well. What are the rates on an ADU construction loan?
Ooh, that you'd have to look at the guidelines to see.
I mean, it'd be the same because it just matters if ADU is approved which pretty much anything is, right? You can put a pool in, so of course you can put an ADU, right? So
Well, you have to look at the guidelines because some guidelines will state that this what you're adding on needs to be attached to the home. So you got to really look at that.
that would be more of a overlay than the Fannie Mae guidelines, I believe, is what you mean there, Jose. Because ADU, they did actually release a letter that ADUs are applicable use of funds now, since they're actually encouraging ADUs to be built in states like state law that supersedes any local laws that allows ADUs to be used as an approved type. So lots of ADU action. Question, but like Jose said, you got to check the details there, because every lender has a little bit different flavor of what they like, and some may allow pools, some may not use, some may not, right? So you got to check there. Technically, I believe it is allowable on all those programs. I'm not sure FHA though. I believe Fannie and Freddie both issued a letter that allows ADUs to be used.
All right, great. I don't see any other questions, but that was a great question. Appreciate it. So I think we can go ahead and wrap it up here then. So remember, everybody.
By the way, could I
interrupt?
Could I interrupt a second? Because I just went quickly and looked at the guideline for the investment property one that we were looking at, the last one here. And it does say you can add a pool. And it does say here they have specifically, I guess this is such a hot topic right now, adding or renovating an ADU, including a manufactured home. Right. So
hold on there. So they can add a home to the property as an ADU? That's what that means? Or they can add a
well, they're giving me a couple they're giving me a few links to look at here, additional so they have one.
That's an interesting twist. If you could just plop a pre-built manufactured home as an ADU, that's a pretty slick use.
Now, mind you, this is the Freddie Mac one I'm looking at, and the Freddie option tends to be more favorable to manufactured homes. So that definitely shows a prime example there how it could differ from guideline to guideline. But yeah, they do have some guidance here. I'd have to click around and open up additional sections, but it does look, it says mortgages secured by properties with manufactured home ADUs will be subject to the maximum finance renovation costs described in either. And they give a section for purchase transactions or no cash out refinance.
Interesting. So that makes it sound like you can try and plop it down almost. That would be really cool.
Interesting stuff. The only thing you can't do, across the board with these renovation loans is raise an existing, raise as an RAZE, raise an existing structure and build a new primary dwelling unit. You can't be adding foundation and stuff like that with this program.
Yeah, great. They want the government, incentivizes us, right, to rebuild homes that may have been damaged, right? So something that burned down to the ground, we would still build existing foundation up, but you could use it for something that's totally demolished. A couple questions here, though, Jose. Let's go over before we go here. Asking about zoning. Of course, zoning is an issue, right? If you're trying to do an ADU or something. But as I mentioned, and as Jose mentioned, it is a hot topic. Like the state of California, state law, which is usually not done, right? Where a state allows an ADU, whereas it's usually municipalities that do the zoning. The state has done some sort of proceed. It is a very hot topic. Other states are following suit. Lots of municipalities are following suit. So you're exactly correct there, Ted. We do need to make sure that when it is, and it is becoming more popular ever more. So, Jose, anything on that?
No, that's good.
Okay, and then Ted is also asking about modular homes. So can you quickly go between manufactured and modular and define them? Because similar, but...
So manufactured home, as we know, is basically put together, mainly it's assembled in the factory in two separate pieces, and then it's brought to the job site, and the two pieces are put together and then it's permanently affixed to the ground, and then it transitions from being a mobile home to a manufactured home once you have that affidavit of a fixture. A modular home just means that it's put together in pieces. Those pieces tend to be pre-assembled in the factory. Like you could have like a wall that already has the electrical inside the wall, where they just come and connect pieces and all the wiring is already inside the wall. But it could resemble, from the outside, it could resemble a regular site-built or stick-built home, as they like to call them. So with the modular home, it's more about the style. If the modular home appears to look like a traditional home and doesn't appear to be too unique of a look, then there should be no issues with the fact that the modular home is assembled on site, because a site-built home is also assembled on site. It really has to look more with the style of the home. You know, if it looks like a regular home, the fact that it was built, that it's either, let's give a couple examples, the fact that it's either frame and stucco, right, which is, you know, basically a wood home with a little stucco on the outside, or if it's concrete block and stucco, or if it's modular home. If the three of them look the same when you're looking at them from the outside, then everything is fine. However, if the modular home looks like something real unique, like one of these dome homes or just something totally out there, then you're going to have a problem with that modular home. So it's really, on the modular home, it's more about the style of the home, not the fact that it's a modular home.
Exactly. And like a log home, right, would be a modular home because they cut the logs in a factory and they build them on site. But log homes don't qualify for hard homes at all because they're so unique. So it's more about the property type than the method of construction, right, Jose?
Correct.
All right. Yeah, unique is usually not good, right? Unique might be good for hopefully you selling the property or something possibly, but lenders don't like unique. We want everything to be able to sell to anyone, right? Okay, well, let's go ahead and wrap it up then. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with a new topic. Appreciate it, Jose. Thank you for everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.